Hi, welcome to Audiobook Academy. This is a self-paced audiobook. There's no need to keep an eye on things. Just pay attention. Thank you for taking the time to listen. This is a book summary of Profit First by Michalowicz. The most common method of calculating profit is fairly straightforward. Profits are calculated as sales minus expenses. While that formula is logically correct, it does not take into consideration the nature of human beings in any way. A typical small business owner examines his or her bank account balance and makes decisions based on the amount shown there. This means that if you're fortunate enough to have any money left over at the end of the day, you've made a profit. Consider, on the other hand, a method by which you could be assured of a profit year after year. Profit First examines the following method of keeping your financial records. Sales minus profit equals expenses. The basic concept is that you take a predetermined percentage of the profit from every sale first and then use only the remaining portion to pay for your operating expenses. In addition to being an entrepreneur, Michalowicz used to write about small business for the Wall Street Journal. By the time he turned 35, he had founded and sold two multi-million-dollar businesses before going bankrupt after failing as an unsuccessful angel investor. Michalowicz started his third business as soon as he graduated from college and worked hard to turn it into a million-dollar enterprise. He used to be a business makeover expert on MSNBC, and he is now a well-known keynote speaker on the subject of entrepreneurship. Michalowicz is the author of 3 books, the most recent of which is The Pumpkin Plan. His other works include The Toilet Paper Entrepreneur and The Pumpkin Plan. He holds a bachelor's degree from Virginia Tech. As any small business owner will tell you, it is not the amount of turnover that is important but the quality of the turnover. It is determined by how much of the money you are allowed to keep. It is time to draw a line in the sand and declare that, from now on, you will run a successful business and that everything else will pale in comparison to your primary goal of achieving financial independence. Any business that follows the Profit First system will see an improvement in their performance. No matter who you are or what you do, almost every small business will experience cash flow issues at some point. Even if you increase your sales, it will not help you if your costs increase at the same time. Profit, rather than growth, is the most important factor in keeping your small business healthy. The majority of small business owners eventually resort to what is known as bank balance accounting. Is this something you've heard before? Your daily bank account balance allows you to determine whether or not you are doing well financially. When you look at what you have in the present and make decisions solely and completely based on that information, psychologists refer to this as the recency effect, and it is common practice. The act of looking at our bank accounts and using that information to guide our thoughts and, eventually, our actions, seems natural to us. Unfortunately, even if you have the best of intentions, running your business solely on the basis of how much money you have in the bank is not a good idea. After a while, you find yourself trapped in a survival trap, where you have to limp from one emergency to another. Simply put, the survival trap arises whenever you justify making money at any cost, even if that means delaying the payment of taxes or suppliers for a period of time. You have fallen into it. This sum appears to be straightforward, but it is, unfortunately, the source of confusion for business owners like you. Profits are calculated as sales minus expenses. Let's refer to the amount above GAAP as overhead, generally accepted accounting principles. GAAP teaches you to prioritize sales and expenses over all other considerations. Logic dictates that as long as you sell enough, everything else will take care of itself. In practice, GAAP is a recipe for failure when it comes to growing a profitable small business from the ground up. Consequently, decide that you will run a profitable business beginning today and that everything else will be secondary to that goal. Make today the day you make a promise to yourself that your company will put profits first and foremost in its considerations. Profit First is a philosophy that states that you should set up a banking system that is compatible with the way you think and operate. This is accomplished by setting up 4 separate accounts at your bank and then distributing your cash flows among those accounts in a methodical and efficient manner. Profit First is a practical approach that focuses on preparing your business to be profitable and keeping it profitable. To make use of this system, you must make it as simple as possible while staying away from all temptation. The weight loss industry is one that is intimately familiar with the difficulties of human temptation. When you look at the majority of the diet plans available to dieters, you will notice that they all revolve around 4 basic systems. The fundamental systems. 1. Make use of smaller plates so that you will naturally consume fewer servings. Smaller portions equal fewer calories, which equals weight loss. 2. Sequence your servings. Start with your vegetables, which are packed with nutrients. Vegetables are a must. 3. Remove all temptations by not keeping junk food on hand or easily accessible to your children. 4. Maintain a regular eating schedule. Avoid eating when you are hungry because this will lead to overeating. Small frequent servings are preferable. Profit First is similar to a weight loss strategy. To finance your company, Profit First applies the same concepts that are used in weight loss. 1. Small plates should be used. The Profit First team recommends that you have 4 bank accounts instead of just one. You have 4 accounts in which your funds are distributed: a profit account, an owner's pay account, a tax account, and an account for your current operating expenses. 2. In a logical sequence, serve the food whenever funds are received. They are always transferred to your profit account. Pay your owner's account as well as your tax account from that point forward. Your operating expenses are all that is left. 3. Discourage yourself from succumbing. Have your profit account and tax account at a different bank in order to make it difficult and painful to access some of your money. As a result, it is more difficult to borrow funds from one account to use in another, especially if access is restricted. 4. Keep the music playing in the background. The 10th and 25th of each month are the dates on which you complete your payables in Profit First. Because of this, you can see your money growing and gain a better understanding of where it is actually going. In order to avoid flying by the seat of your pants, you should establish good habits. The Profit First methodology can be summarized as follows: when it comes to managing your cash flows, you prioritize making a profit for yourself first and foremost. The profit you make becomes the first thing you pay for, rather than an afterthought. Each of the 4 separate bank accounts. Pay attention to the fact that Profit First necessitates the creation of 4 separate bank accounts. It is likely that you already have a checking account set up for your business that will serve as the operating expenses account. A profit account is a financial account that generates profits. Account for tax purposes. A salary account for a business owner. Setting up tax and profit accounts at a bank other than the one where your business's day-to-day operations are currently conducted will be extremely beneficial to your company. This type of account can be considered a savings account because they are merely holding bins for funds that have been assigned to them. If you configure them so that you are unable to even view the balances online, you will have accounts into which you can deposit funds and then forget about them altogether. It may seem strange, but keeping these accounts hidden from view will aid your company's ability to grow and prosper. Additionally, Profit First requires that you work in a systematic manner in order to allocate funds to these 4 accounts. Your responsibilities include the following on the 10th and 25th of every month. Ensure that your bills are paid on time. Transfer funds between the various accounts on your computer. Gain an understanding of where your money is truly spent. It will be motivating to keep track of your financial performance twice a month. You should also pay yourself a dividend on the first day of each new quarter, which you should do on a quarterly basis as a bonus. Take 50% of the money in your profit account as a dividend, and you'll have accomplished your goal. Leave the other half in your head, just like you would a bank deposit. You'll notice a subtle shift in your thinking as you become accustomed to receiving regular profit distributions. Celebrate. You should spend that money on something that you and your family will enjoy doing together. Because doing so allows you to stop viewing your business as a money-sucking monster and instead see it as a money-generating machine that provides you with ongoing benefits and support. If you follow the Profit First methodology, you will find yourself falling more in love with your company with each passing month. The funds in your profit account should continue to accumulate after you have made a profit distribution until you have enough funds to cover 3 months' worth of fixed expenses. Following that, you can begin to use the funds to make capital investments that will increase your productivity and raise your overall income. If you are implementing Profit First, the first question that comes to mind is determining what percentages should be used for each of the accounts involved. Please remember that the numbers provided are only suggestions. You must determine for yourself which numbers make the most sense. Try the following exercise to figure out what percentages you should aim for. 1. First and foremost, determine your current location in space and time. Add up all of your top-line revenue from the previous 12 months, then subtract all of your payments for materials and subcontractors to arrive at your real revenue number. 2. Just take a look at how the current real revenue is allocated. Your actual profit from the previous 12 months, as well as how much money you paid yourself, how much income tax you paid, and what your operating expenses were, are then entered into the spreadsheet. Start with the numbers and work your way backwards to express them as percentages of your actual revenue. 3. Compare your current distribution to the distribution you want to achieve in the future. The target percentages recognize that your allocation varies depending on the stage of development at which your company is currently operating. See below. The first few years of your career, you are almost always the sole employee. As your company grows and hires more employees, you will implement systems and adjust your compensation to reflect the fact that you are no longer an employee but rather an investor. As your company grows, it is likely that you will hire more management to oversee the company's operations and earn more money from profit distributions rather than from being a hands-on worker. Please keep in mind that the tax rate is only a guideline and is subject to change. Depending on your actual tax rate, you may need to make adjustments up or down. 4. Identify the problems you need to address. Examining how you currently allocate your real revenue against the target rates, and deciding on a fix for the foreseeable future. You should write increase in this section if you need to increase the percentage of revenue allocated to this area, or decrease if you need to decrease the percentage of revenue allocated to this area. Profit first can be used to eliminate debt while also optimizing your company's performance. It won't take long before you realize that debt is the most significant obstacle you must overcome. For your business to remain profitable in the long run, you must first and foremost eliminate debt in a strategic manner. Once you have paid off your debt, you can use profit-first thinking to optimize and fine-tune your business in order to ensure that it continues to generate profits in the years to come. Putting profit first into action requires stringing together a series of small steps in the right direction and then repeating them over and over again until the process is successful. The goal is not to make sweeping changes all at once but rather to make small changes over time. Make your immediate assessment of where you are right now your starting point, and then begin moving in the direction of where you want to end up. Consider the following scenario. Your instant assessment currently looks like this. In that case, your objectives for the upcoming quarter could be as follows. Profit should be increased by 3%. Make a 5% reduction in operating expenses. By 2%, increase the owner's salary. You conduct another instant assessment at the end of the next quarter. Having achieved your objectives, your life will look more like this. Instead of attempting to make large, dramatic changes in a short period of time, be content with taking several small steps in the right direction over a period of months. Create a sense of urgency for change and continue to move forward. When setting up 4 separate bank accounts, rather than using a single general bank account for everything, it is absolutely essential. Accounts for profit, tax, and owner's salary, among other things, must be kept separate. You must make the transfer of funds into those designated accounts on the dates specified, the 10th and 25th of the month, respectively. Always keep in mind that you're attempting to transition away from operating your business on the basis of your account balance, bank balance accounting. In order to reap the benefits of profit first, the funds must be transferred to separate accounts. By keeping your profit and tax accounts at a separate bank, you can make it more difficult to access the funds in them. Thus, the temptation to borrow money from one account to cover a deficit in another account is reduced to a lesser extent. Profit first will only begin to work its magic once you have gone to these lengths in order to transform your company from a cash-sucking monster to a money-making machine. What you can do to increase your profits. Following the successful implementation of Profit First, there are a number of actions you can take to increase your ongoing profitability. Here are a few examples. Your expenditures should be minimized. Increasing sales or cutting expenses are the only two ways to increase profits, according to logic. However, building sales are not going to happen overnight. You should be working on both. If you follow a few simple steps, you can lower your expenses right away. For example, think about whether or not the expense is truly necessary. The number of times you purchase items that are of no value will astound you. Put an end to it right away. Examine any recurring bills you may have and cancel any that you no longer need or want to receive. Some of those are almost certainly going to be included in the mix right now. They were beaten back. Examine and seek out ways in which you can derive greater pleasure and enjoyment from saving your money as compared to using it to purchase things. When you save money and when your profit percentage increases, give yourself a reward. Consult with someone who can provide emotional support. Gather with others who share your interests. Establishing an accountability group where you can meet with other business owners and celebrate the things you're doing to save money might be a good option. Think of some fun, and preferably outrageous, things you can do to celebrate your financial success, and then get busy having a good time. In the office, turn on some loud music and dance around if that gets your blood pumping. Make a lasting impression by doing something unique. Debt freeze is a financial strategy. Analyze all of your business-related expenditures from all of your bank accounts over the previous 12 months. How much money did you spend on non-labor expenses, such as payments to subcontractors and your own salary? Take a look at your expenses and note which ones resulted in immediate revenue for you and which ones did not. Then make a commitment to refrain from spending money on items that do not generate revenue going forward. Debt should be frozen, And you should begin working toward debt elimination. Streamline your organization's structure. Labor is the most expensive component of most businesses' operating costs. Evaluate your team and ask yourself, who are the A players on my team? Are there any roles that absolutely must be kept in-house? Which positions do we no longer require filling? Can you tell me about the roles that I could be taking on personally? If you're being completely honest with yourself, you might discover that you have too many employees for your current revenue level. Layoffs should be considered for those who are not A players or who are filling roles that should be outsourced. This will be difficult and devastating, but it is necessary if the company is to be profitable in the long run. By all means, consult with your attorney and adhere to all applicable labor laws, but don't hesitate to fire the employees who aren't necessary. Then you should explain to your remaining employees why you had to take the action you did and how it will affect the long-term viability of your company. Take an active role in the management of your funds. Call your financial institution and request that all automatic withdrawals from all of your accounts be canceled. Additionally, contact your credit card issuers and request that they issue you a new card with a different number. Inform all of your vendors that you will pay them each month by check on the 10th or the 25th of the month, whichever is the more convenient date for them to receive payment. Then you'll have to wait to see who contacts you for your new card information. If you're like the majority of people, you've probably got recurring charges running in the background that you've completely forgotten about. Remove them from your life with immediate and long-lasting results. Examine your remaining monthly expenses to see if you can negotiate a lower rate for them. Contact each vendor and inquire as to what steps you need to take in order to reduce your monthly bill by 25%. Consider whether any other, less expensive alternatives have become available since you last looked into this issue. Keep track of every expense you are able to eliminate completely, renegotiate at a lower rate, or replace with a less expensive alternative. This is exhausting and time-consuming work, so remember to take time to enjoy your victories along the way. Every dollar you save by not having to pay someone else is another dollar that you can put into your profit and loss statement. Enjoy. Begin building a debt snowball. List all of your debts, starting with the smallest and progressing to the largest, regardless of interest rates. Pay the bare minimum on all of your debts, with the exception of the smallest. Then get to work and pay off that first debt as quickly as you can to avoid further debt. After that, you begin paying off the second debt by adding the amount you were paying on the first debt, and so on and so forth. A debt snowball gathers speed and momentum. You begin with small goals and gradually progress to larger ones over time. You should only incur new debt while working to eliminate all of your existing debts, so be careful not to accrue any new debt. The ability to reduce expenses is critical for Profit First to function, but increasing your efficiency is another way to generate more profit for your company. The three central concepts are as follows. Increase the efficiency of your operations. Take time each week to concentrate on a single aspect of your business and ask yourself, how can I achieve twice the results in this area with half the effort? Don't look for big gains right away, instead, focus on small gains that will add up over time. Then, once you've realized all of your small victories, take a step back and consider whether there are any big and bold steps you can take to move forward. Ask, can you tell me how I can complete this task significantly faster? What can I do differently that will be significantly better? Can you tell me what significant steps forward I can take? Focus on a different aspect of your business every week, and set a goal for yourself to achieve twice the results with half the effort and expense. Be willing to aim for the moon and make significant gains in order to achieve your goals. Even if you don't succeed, it can be a game changer in terms of your career. Increase your sales productivity. Selling more effectively almost always necessitates learning how to sell more intelligently first. Learn what works for you and then incorporate that knowledge into a system that you can use and teach others. Afterwards, you get to work on fine-tuning and improving your sales system, which you will do incrementally over time. To sell productively, you must also become extremely good at what you do and devote all of your time and energy to it. If you're not careful, it's easy to get off track and go off on tangents. Put in place a sales system that is effective and makes full use of the resources available. Make duplicates of your most profitable clients. In order to significantly increase your profits, you should consider firing your worst clients and then investigating ways to clone your best and most profitable customers. The 80-20 rule, also known as the Pareto principle, applies to your customer base in the same way that it does to every other aspect of your business. 80% of your profits will be generated by 20% of your customers, on average. There's no doubt that increasing profits comes from getting rid of your worst clients while simultaneously cloning your best customers. So, what is the best way to clone your best clients? Look for customers who have needs and behaviors that are similar to those of your best customers. Then you can become extremely effective at meeting those specific needs. In the event that you succeed in this endeavor, your existing customers will refer their colleagues to you. If you truly care about your best clients and are enthusiastic about serving them, your marketing will become automatic and highly effective. Profit First can benefit from the incorporation of some advanced techniques. Once you've mastered the fundamentals, you'll discover that Profit First provides a solid framework for growing your business to the next level. Adding advanced tactics or strategies to your Profit First system is simple, and there are numerous options available. Profit First is a tenacious framework for growth that can be applied to businesses of any size or shape. There are a plethora of ways to extend the Profit First framework beyond its fundamentals. Here are a few ideas. Accountability groups are formed to hold people accountable. Joining or starting an accountability group can help you maintain or improve your self-discipline on a consistent basis. This is a group of like-minded peers who meet on a regular basis to share information and ideas with one another. The mere knowledge that you will be required to inform your friends of what is taking place will increase the likelihood that you will follow through and do what you have promised. Pods of Profit. A Profit Pod is a setting in which you teach others the Profit First principles and then assist them in putting them into practice. You form a group of people who are going through the same transformation as you are, and then you get to work helping each other out in a practical way. The premise here is that you always learn more by teaching the principles than you ever do by practicing them yourself, and vice versa. Profit Pods are also an excellent way to give back to the community. If you want to, you can form a Profit Pod with one other person and work together to make money. Take the time to find someone who shares your passion for running and owning a successful and profitable business. You then take on the role of champions for one another and build on your successes. Holding Profit Pod meetings on the 11th and 26th of each month makes sense because it allows you to report on your profit status and discuss any issues that have arisen in the meantime. Instead of simply having good intentions, choose a partner who will push and prod you into acting on Profit First principles rather than simply having good intentions. Increase the number of bank accounts with specific purposes. Profit First is a money management strategy in which you use multiple bank accounts to better manage your money. Opening 3 additional accounts to supplement your main operating expenses account is how you accomplish this goal. You then transfer funds into the accounts that have been designated on the 10th and 25th of each month. That is sufficient for the majority of situations, but if you really want to take your money management to the next level, you should consider opening additional accounts into which funds can be withdrawn. Here are a few ideas. Create a profit and loss account. In this account, you deposit all of your income deposits so that you can see exactly how much cash you have collected before making your 10th and 25th allocations to your various accounts. Making a distinction between income and outgoings in your operating expenses account allows you to get a more accurate picture of how much money is flowing into and out of your business at any given moment. If you do this, your operating expenses account will only show your outgoings and not your incomings. Create a vault account on your computer. The vault is a savings account that contains funds that can be used to cover short-term emergencies. You want to have enough money in your vault account to cover 3 months' worth of fixed expenses at some point. The vault should earn interest while also being extremely low risk. A document stating that you will only use the vault in the event of no or low sales, and that you will also take steps to reduce your fixed costs in the event that you are forced to use these funds, is also recommended. Create a stocking account, often known as a large purchase account. If you make large purchases of inventory or stock on a regular basis, you should deposit money into this account once a month to ensure that the funds are there when needed. You'll be able to make significant progress on paying off a large expense before it arrives. Create a pass-through account for your business. Whenever you supply a service or product to a customer at a lower cost than you incur or when you are reimbursed in full for your expenses, this account will keep track of that expense and segregate it from your business income. It deals with monies that are received by your company as reimbursements rather than as generated income or revenue. Create a materials account for yourself. If you find that the bulk of your money is spent on supplies and subcontractors, it may be beneficial to establish a materials account for your business. This is where you collect the money that will be given to suppliers so that you don't have to spend it all on your own expenses. Maintain a separate payroll account for each employee. The cash for your employee payroll are taken from your income account or general operating expenditures account if you have one of these accounts. Another benefit is that it makes it easier to control your cash flow because it clearly and concisely specifies where the funds will be spent. Create an account for the purchase of large-scale equipment. If you're going to make a large purchase, this account can be used to keep track of your progress in the same way that your stocking account is. Make a deposit into this account on the 10th and 25th of every month, and you will have enough money to make that large buy. Use a drip account to save money. Whenever you receive payment in advance for a large project, you should transfer the funds into your DRIP account. Afterwards, you make a monthly deposit into your income or operating expenditures account in the amount specified by the bank. It is possible to manage the genuine cash flow of earned money into your organization with the use of a DRIP account. Create a petty cash account for your business. Maintaining a petty cash account with a predetermined monthly amount can also assist you in keeping track of and managing your expenditures on small-ticket things. Set up a sales tax account in your name. If you are in the business of collecting sales tax, you must exercise extreme caution in ensuring that the money is delivered to the government on time. If you have a sales tax account into which you deposit the sales tax every time you make a transaction, you may rest assured that the money will be paid out when they are due. It keeps you from getting into a scenario where you regard those funds as though they were yours. Don't get caught up in your monthly nut. Rather than this, decide on your pay and work towards it. Small company owners often become stressed out about their monthly nut, which is the amount of money they need to bring in each month in order to keep the doors open for business. That is a distraction since it causes you to concentrate on expenses rather than profits. As suggested by the Profit First philosophy, if you concentrate on creating a profit, your expenses will be taken care of automatically. Keep your attention focused on the amount of money you need to be putting twice a month, on the 10th and 25th, in order to have a very strong profit account surplus at the end of the month. Determine how you will provide that much value to your current and prospective clients. That is something that deserves your whole attention. Maintain your efforts to apply the Pareto principle. You're already aware that 20% of your consumers will earn 80% of your revenue, so why not capitalize on that knowledge? Currently, you're attempting to fire your worst clients while simultaneously cloning your top clients in order to take advantage of this. Never forget that 80% of your profit will come from only 20% of the products or services that you provide to your customers. When you combine the two, you will see that some of your most profitable clients purchase the most of your profitable offerings, while others choose for the least profitable ones. Likewise, a handful of your dissatisfied customers will already be purchasing your most profitable products. Examine your options for persuading those dissatisfied customers to make additional purchases. Meanwhile, determine what it will take to persuade your most loyal consumers to purchase more profitable merchandise. Profits should always be your first and main priority, and you should let that necessity dictate your actions. Make a commitment to your way of life. As their profits grow, many entrepreneurs and small business owners find themselves having to increase their living expenses. This is counterproductive if your goal is to achieve financial independence. Instead, make a vow to yourself that you would maintain your current lifestyle for the next 5 years, allowing you to put all of the extra money you earn towards reaching financial independence. Try the following strategies to create as large a difference as possible between what you make and what you spend. Whenever you want to accomplish something, take a moment to consider whether there are any free options that you may use instead. Whenever possible, avoid purchasing new items, such as automobiles or houses, when you can obtain the same benefit by purchasing old. They will be used as soon as you purchase them, so there is no need to wait. Never pay the full price for anything in your life. Always be willing to bargain and look for less expensive options or alternatives. Delay making any significant purchases until you have jotted down 10 alternatives to making the buy and have given each of them careful consideration before proceeding. To put it another way, live frugally and don't put on the appearance of being a huge spender. Commit to consuming half of your increased income, or less, and putting the remainder back into savings for every increase in your income. The more quickly you can develop your savings, the sooner you will be able to achieve financial independence. Don't forget to instill the value of profit-first thinking in your children. Everyone wants their children to be successful in their endeavors in life. Educating your children to always take their earnings first and then adjusting their spending to match what is left is one of the most important things you can do to ensure that they have a successful financial future. A good way to accomplish this is to instill good habits in them from an early age. Give each of your children 5 mailing envelopes, and instruct them to label each envelope as follows. The big dream is contained within envelope number 1. This should be used to purchase something substantial, such as a horse. Tell children to put 25% of their char money or presents into this envelope as a safety deposit. Family support is the subject of envelope number 2. Having each child give something every week, even if it's as little as $5 a week, will help. This is something they will have to get used to. Impact is the subject of envelope number 3. Encourage your children to deposit 5% to 10% of their income into this envelope, which they can then use to donate to a charity of their choice or to establish their own business with the money. The vault is the name of envelope number 4. Encourage your children to set aside 10% of their earnings for a rainy day fund. You hope they would never have to use it, but it teaches them to be well prepared in the future. Envelope number 5 contains what they refer to as mad money. They can spend this money on whatever they want and have a good time. You will be instilling in your children good habits that will serve them well throughout their lives and careers if they learn to constantly distribute their money to the different envelopes before doing anything else. As a result, they will be more prepared to deal with the realities of life. Operating expenses account is a type of expense account that is used to pay for day-to-day operations. A profit account of 15% is required. Owner's salary is worth 25% of the total. 15% of the total is tax account. 45% of the total operating expenses. Profit first is a concept that we believe in. My own takeaway from this: profit first appeals to me because of how straightforward the system may be. Obviously, the premise is easy, but having the option to automate your accounts eliminates all of the extra processes associated with needing to move money around on a regular basis. When you're more than likely investing more than you're receiving in return, the book can be a little difficult to put into action from the get-go. However, as soon as you have some cash flow, you'll be all ready to go. Begin by reserving even the tiniest fraction of your profits. Even if all you have to give is 1% of your time, that is still better than nothing. You'll discover that you can gradually reduce the amount of profit you take while simultaneously increasing it. Thank you for listening in Audiobook Academy. Please don't forget to subscribe for more content like this. See you in next audiobook.